warm welcome to this budget special episode of the morning show. This year's union budget brought all the key ingredients together. It was pro-growth as the government committed 10 lakh crore rupees to capital expenditure, which is 33% more than last budget. It was pro-middle class as the income tax rebate limit was raised to 7 lakh rupees. Government borrowing plans were close to the market's expectation, which may offer it a good runway. Industry too welcomed it amid good news on pharmaceutical and automobile sectors. In today's budget special, we spoke to experts and economists to gauge the likely impact of this budget on each of these segments. We start with how it may impact the common man. There is one part in the budget speech which everyone is interested in, the announcement on personal income tax. So when Finance Minister Nirmala Sitharaman finally reached that point, she said, "Now I come to what everyone is waiting for." And her next announcement on tax rebates made millions jump on their seats. Debargya Sanyal spoke to experts to understand the likely impact of the budget on the lives of common man.
I propose to increase the rebate limit to 7 lakhs in the
Hit hard by inflation, India's salaried class heaved a sigh of relief on Wednesday when Union Finance Minister Nirmala Sitharaman announced 5 major changes in personal income tax regime. She said that the changes were aimed at benefiting the country's hard-working middle class. Sitharaman proposed to raise the tax rebate limit to 7 lakh rupees in the new tax regime. She also proposed to reduce the number of slabs to 5 and increase the tax exemption limit to 3 lakh rupees. We spoke to experts to know the fine print.
Here's what the budget means for income tax payers. When the finance minister said that below 7 lakhs, you don't need to pay tax, she was referring to a specific clause, which is the income tax rebate limit, which says up to that limit, you don't need to pay tax. Now, when she's referring to the slab, right, the slab is the rate at which you pay tax for that amount of earning. So these two need to be looked independently. So if you're someone who's making 15 lakhs, right, you'll be affected by the latter, which is the various tax slab. But if you're someone making less than 7 lakh, you're only going to be affected by the fact that the rebate lets you through without having to pay any income tax next year. 2 categories are clearly benefited. So if you make up to 7 lakhs, you don't have to pay tax. There's a tax rebate. That's great. If you're in the top of the pyramid, your highest tax slab effectively goes down from 43% to 39%, you're benefited. If you're between 7 and 15, and you are in the new tax regime, that means you don't make any deductions under ATC, home loan, NPS. If you're in that new tax regime, at 9 lakh rupees, you now pay 15,000 less in tax per year. At 15 lakh rupees, you pay 37,500 less in tax per year. However, if you were in the old regime using deduction, there's no change in what you will pay this year.
When we look at the speech and when we look at the fine print, there are some differences, but certainly, it is more advantageous. In new regime, there are a couple of more changes that earlier standard deductions was not considered for once we opt for new regime. But now standard deductions will be allowed. As a result, this will offer more advantage to the person. Secondly, from a HNI perspective, if we look at it, there are a couple of changes which has been made, especially in case of when capital gains is to be claimed exempt under 54, where you are investing in a new asset. If the entire consideration received is invested in a residential property, the entire capital gain would have been exempted from tax. Now, the investment in excess of 10 crores will be ignored. As a result, there will be a substantial fall on claiming exemption under 54.
They have tried to promote the new tax regime by making it more attractive. However, if one sees the granular calculation, probably there is not much difference between the old regime and the new regime in terms of overall tax payable for a small taxpayer. There will be just marginal difference, and that too under the old regime, the taxpayer will be more beneficial.
Yeah, interestingly, the government has increased the limit of senior citizen savings schemes and monthly income schemes, and also offered a similar scheme for women, where you have a time limit of 2 years and you can earn 7.5% interest. Now, this is an interesting move because a lot of us were expecting that ATC would go up, that you'd have more opportunity to invest either in PPF or similar fixed income instruments and claim a tax benefit. However, they've not done that. They've not touched anything in the old tax regime, and they've offered these benefits. I think this is excellent for senior citizens who have been feeling the pain of, probably not savvy enough to invest in the stock markets and looking at fixed income instruments. I think this will definitely find a lot of favor. So senior citizens will jump into this. They have a higher deduction for interest income as well. For women also, I would greatly encourage them to look at, what is this Mahila Savings Scheme, 2-year lock-in and 7.5% taxability. Of course, tax interest will be taxable, and that also seems like a good thing to opt for.
So this government this time in the budget has tried increasing more money at individuals' hand, which will lead to more consumption, more savings. Also, if you look at the super rich one, where the surcharge used to be 37%, the overall surcharge will now come down to 25%. So on that category also, they will have more money in hand, which will be used for either saving, consumption.
While experts and industry insiders agree that the budget presented a relief for the common man's pocket, they also highlight the fact that the middle income group would require serious strategization in choosing between the old and new tax regime, with an eye on which schemes spell the greatest relief for them. Meanwhile, there is news for smokers amongst the middle class too. The government has increased the National Calamity Contingent Duty or NCCD on cigarettes by 16%. So, the packs of cigarette will soon cost more.
With dark clouds of recession hanging over the global economy, India Inc. leaders had raised their concerns and handed over their wish list to the finance minister during their pre-budget consultations. Now that the budget has been tabled, were all their demands met? And what will be its impact on India Inc.? Bashwar Kumar connected with industry experts to bring you the answer.
The budget takes the lead once again to ramp up the virtuous cycle of investment and job creation. Honorable Speaker, sir, the capital investment outlay is being increased steeply for the third year in a row by 33% to 10 lakh crores, which would be which would be 3.3% of GDP. This will almost be 3 times the outlay made in 2019-20.
That was Finance Minister Nirmala Sitharaman delivering on a key India Inc. expectation in her 2023 Union Budget speech on the 1st of February. The centre continued its focus on capital expenditure, increasing it to 10 trillion rupees for FY24. This is a steep increase compared to FY23's outlay. It will include the continuation of 50-year interest-free loans to states for their capex needs, and that support has been increased by 30,000 crore rupees to 1.3 trillion. Experts say the baton has now been passed to the private sector to crowd in its share of investments, which has been missing so far.
If you really look at investment and growth in investment demand, just fantastic to see that the capex focus that the finance minister has kept going is just tremendous, because while there was some apprehension whether the government would continue with the focus on capex, I think they have really focused on it, which will, and not only from the centre, encouraging the states to also spend on capex, that 50-year loan issue. This has been very, you will see a lot of crowding in of private sector investment happening.
If you see what is the composition of expenditure, so it is more towards investment. Once investment, economists to understand better in terms of jargon, because the multiplier is higher, because investment will create jobs, it will create industrial activity. So it is good for growth.
Over 39,000 compliances have also been reduced and over 3,400 legal provisions decriminalized to enhance ease of doing business. Till now, multiple identities have been needed for conducting business. Now, for all establishments that are required to have a permanent account number, that ID will be used as a common identifier for all digital systems.
The two big impacts is one, just ease of doing business. But the second advantage, and which is sort of a hidden utility, is this can actually do for corporates and small businesses what Aadhaar has done for individuals. It can create a real resource of data which can be utilized to give access not just to public goods but also private goods and services such as financial services.
Sitharaman also proposed raising the income limit for presumptive taxation for micro enterprises from 2 crore rupees to 3 crore. Among other measures, she also announced a revamped credit guarantee scheme for MSMEs with effect from 1st of April this year.
On the MSMEs, extending the credit guarantee scheme is a great support to the MSME sector. As we all know that this is MSME is the backbone of Indian economy.
Keeping with expectations, direct tax SOPs for individuals have also been announced.
We will wait for the details. But if you look at a figure of about 35,000 crores net being what the government is foregoing in terms of direct taxes, I think that's a very, very noticeable boost to consumption in the country.
India is a consumption-led economy. To have the income tax, changes that has been made is just a great, not a morale booster for every section of the society. It's an acknowledgement that yes, we were living in a high tax regime. We need to moderate it, and I think that will really boost consumption demand.
From an outlay of almost 20,000 crore rupees for the green hydrogen mission to giving mobile components and TV parts manufacturing a fillip, other measures concerning India Inc. were also announced in the budget speech. So, what did experts and industry insiders have to say about the budget's impact on India Inc.?
It sticks to a path of fiscal consolidation while investing in the green economy and the energy transition. It's also focused on regulatory governance, improving the processes for regulation making, and bank governance.
11.8 lakh crores of government borrowing from markets, I think, is a very manageable figure which will not stress the banking system or crowd out private sector borrowers. I think that's important to keep in mind.
On the tourism sector, I saw a great focus. And this is picking up from the vision of Honorable Prime Minister Modi. More focus on domestic as well as, of course, foreign tourists coming into India. But a direct benefit transfer for 47 lakh youth to be skilled in the tourism sector, I think is a great initiative.
There may have been some missed opportunities too.
Custom duty rationalization on some of the input products will also help them from an overall perspective. One area which they could have addressed is extending the date for manufacturing companies to start production for a lower tax rate of that 15% from March 31, 2024 to maybe a later date.
Focusing on AI and 5G labs, green growth, these are positives. Of course, there's always dil mange more. Could we have done more? Of course, I would say simplifying some of the things on from a tax perspective, things on manufacturing could have been improved, linked to the PLI scheme, etc.
India Inc.'s initial reaction to the budget announcements has been overwhelmingly positive. However, the real measure of the budget's success will be if a new private sector capital formation cycle truly kicks off in FY24.
Two key benchmark indices, BSE and NSE, moved in opposite directions on the budget day. While BSE soared over 150 points, NSE fell. What has the budget 2023 done for the markets? Are the investors a happy lot? Puneet Wadhwa caught up with Shankar Sharma, founder GQuant Investec, to know his views on the budget proposals and his investing strategy in this backdrop. Let's listen in.
Hello and welcome to the show. I'm Puneet Wadhwa. Today we have Shankar Sharma, founder GQuant's Investec with us on the show today. Hi Shankar and welcome.
Thanks, Puneet.
Shankar, what in your opinion has the budget done for the markets and investors this time around?
I think what it has done is a fantastic thing. It has not given us any problems on the taxation front, which is what the big apprehension was. There was a lot of noise, talk that they will either increase the holding period for getting LTCG benefits or increase the rates, make it on par with other assets and all that. Thankfully, and I say thankfully because you need to encourage people to come out of traditional saving methods like gold and real estate in India into equity markets. We need that. And the way you create a flow from old assets into new asset classes is by incentivizing people. So this was a very, very absurd notion that everything should be equal. No, everything cannot be equal. We need to create incentives for monies to flow. Like for software industry, we gave them a tax holiday for like a long time. Why? Because we needed the software industry to prosper. Other industries were getting taxed at 40%. Software industry had a tax-free life for, I think, a good 15 years. Same way in trying to direct savings, we have to give incentives to people to direct their savings into the least taxed areas. So I think sensibly the government has avoided tinkering with the tax rates. I think that was a big positive. Other than that, there are only positives in the budget. I did not see any negative at all.
Would you like to highlight 3 or 4 positives for us?
Well, capex increase, a third, that is very, very positive. On the taxation, on the personal taxation front for the lower income as well as the middle class, there appears to be, I have to study it more, appears to be a very, very decent, sort of lowering of the tax rates. Even for the rich, I do believe the numbers have come down into the 30s instead of it being in the 40s. So, I mean, overall, I think it has just been a very pleasant experience, this budget. It was a short budget speech. It was, again, a thankful, we are very thankful. So all of it, we can just take away only positives. To the best of my recollection, there were no negatives.
So, on a lighter note, are you happy that the speech was short or the measures were good? Or both?
I think both. And the same measure being announced over 3 hours, as we have seen in some of the previous budgets, and versus 1.5 hours, much, much more palatable.
But don't you think that these measures, to some extent, are a bit populist? I mean, do you think that the budget was a please-all budget, so to say?
I don't think the budget was populist. And by the way, even if it is called populist, I don't see what is the problem in being populistic, as long as you manage the overall populism within limits. Because we are a democracy. In a democracy, we can't just leave everything to market forces. We have to take care of the poor also. And also remember one thing, the government left out actually did the populist part before by the food grain scheme. Okay, that is the most populist thing we have seen from this government, to the best of my memory. in the last 6-7 years. It did that prior to the budget itself. So it kept the budget more business-like, more focused on what the market wants to hear. And the populist part they actually did before the budget. So there is populism, but not in the budget itself.
Markets, then you think will be happy with the estimates on fiscal deficit, government borrowing, GDP growth, etc. Or should one take them with a pinch of salt, given how the economic setup will shape up in 23?
See, in India, everything has to be taken with a pinch of salt. And remember one simple thing, that the GDP growth estimate seems reasonable at first glance, but it may turn out to be, even, I don't think the finance minister is lying or making it up. I think she's being very realistic. But ultimately, still a projection, it's still a forecast, and many things can happen in the interim which can change things. And one of the biggest factors that can lower our GDP growth numbers in the 23-24 year is going to be our pressure on exports, because I don't see how you're going to get any export growth worth mentioning, because your big buyers of exports, Europe and US, are in some form of recession. And if they don't buy, you don't grow on your exports. So therefore, your net exports becomes a drag, and therefore, I think the GDP estimate, while being realistic today, may find some challenges as we go a quarter or two down the road.
So what is the one defining characteristic, according to you, that makes this budget stand out as compared to the previous ones announced by this government, at least in this tenure?
I think for a change, the middle class has got a look in. Earlier, it was only the poor or the rich, in a good or a bad way, you were getting attention. I think they have done something with the middle class. You can call it populist also, because the government needs the support of the middle class for the 24 elections. I think, and of course, the other thing here is that there's a lot of thrust on the newer age things like hydrogen and environment and all that, which is not a departure, but I just like to hear that the government is also looking at those aspects rather than just focused on roti, kapda and makan.
So how are you approaching the equity market in this backdrop?
For me, nothing has changed. I mean, the budget, in any case, I don't look at the budget and make any decisions, because a lot of things need to be understood. You have to talk to the companies affected, either in a good way or in a bad way. So I make no decisions on budget day as to what I'm going to do in the equity markets. These things take time to absorb and decide. I mean, my strategy still remains very, very bottom up. I think India is a fantastic bottom up market. It's the best market by far for bottom up stock picking, and I'm sticking to what I like best.
One last question as regards the budget. You had given a rating of 12 on 10 before the budget in terms of your expectations. Would you like to change that? Probably a 15 or an 8?
Yes, I'm making it a 15.
And where has this 3-point surge come from? What has contributed to that?
I think the non-tinkering with the LTCG.
Thanks, Shankar, so much for your time. We hope to see you soon.
Sure, thank you.
In the budget statement, the government provides a detailed account of its revenue and expenditure. The total size of the 2023-24 budget is 45.03 trillion rupees, which is 7.5% more than the previous one. But have you ever wondered where the government gets its revenues from and where it spends it? Raghav Agarwal's report offers a peek. Suppose our government earns 100 rupees in a year. The largest share of it, 34 rupees, comes from borrowings and other liabilities. It is followed by GST and other taxes, which are equal to 17 rupees. Then the incomes from income tax and corporation tax are equal to 15 rupees each. It is followed by 7 rupees in the form of union excise duty. It all accounts for 88 rupees of the government's total income. The next 6 rupees come from non-tax receipts like rent, penalties and fines. Customs and non-debt capital receipts account for the remaining 4 rupees and 2 rupees. Now let us come to the expenditure side. If the government spends 100 rupees in a year, its largest share goes towards paying the interest on previous borrowings. 1/5 of the total spending, or 20 rupees, goes towards it. It is followed by the money given to the states as their share of taxes and duties, which comes at around 18 rupees. The allocations towards the central sector and centrally sponsored schemes are the next two big expenses, accounting for 17 rupees and 9 rupees in the total expenditure. Expenditure towards the Finance Commission and other transfers account for 9 rupees. Further, defense and subsidies take away 8 rupees and 7 rupees. And the spending on subsidies accounts for the remaining 4 rupees. On the income side, the collections from GST and non-tax receipts have gone up by 1 percentage point, while from borrowings and customs have fallen by 1 percentage point each. On the other side, the government spending on paying the state's share of taxes and duties has gone up by 1 percentage point, while the expenditure towards subsidies has gone down by 1 percentage point.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Opposition leaders have meanwhile slammed the budget. Congress alleged the government efforts to boost private capex have completely failed. Well, hope you enjoyed our budget special show. For more comprehensive coverage of the union budget, do log on to business-standard.com. That's all for today. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.